Hello, everybody, and thank you for being here. My name is Jeremy Dancer, and I am a Forex trader, Forex coach. And in this video today, we're going to be going over the S&P 500 and the correlation it has with the US dollar Japanese yen. If you are a Forex trader, you need to be trading the US dollar Japanese yen at this historic time. If you wanted to communicate with me, the easiest way is through Facebook Messenger. You can go to my group, and that's the fastest way or the easiest way to find me, and we can chat. If you are already ready to make a decision and join my group, please go to my website first. Once you fill out the registration form, make sure you request to be added to my private group. And once I see your registration, I will approve your requests, and we will start working together. Okay, so let's get into it. So when it comes to trading the US dollar Japanese yen, the US dollar Japanese yen correlates very strongly to the S&P 500. And right now, it is at a very critical level. And let me show you why. So on this chart, you can see here that the S&P 500 has temporarily broken the correlation with the US dollar Japanese yen. I'm not really sure why that's happening. That could be because the US dollar has been quite strong, and because the stock market is closed, there's a lot of reporting that's not happening. So we should see a correction when the market opens tomorrow during the US session. But this is why this is such a great time to be trading the US dollar Japanese yen. As you can see, the S&P 500 is on a very strong downtrend. Okay. And the US dollar Japanese yen, for some reason, is making a very strong pullback. This is giving us a great setup to look for entries on shorting the US dollar Japanese yen. So when we go to Tradingview, we can see here that this is a beautiful entry for the US dollar Japanese yen. We don't have to worry about too much of a pullback from this price point. And we can also see that the price is overbought. Anytime you use a oscillator, in this case, I'm using the stochastic oscillator, you can see here that it's diving down. It reached this high point. So it's starting to make a correction. This move that happened right here was just a retracement, probably to stop out a few traders. The market likes to trick traders into thinking they're in the right position, especially with the US dollar Japanese yen, because it tends to be more bullish than it is bearish. This is a great trap a lot of times market makers use for retail traders. But now that this is starting to make a correction, we can see that the US dollar Japanese yen is going to start correcting itself. And I'm willing to bet as long as the S&P 500 remains on a downtrend, that means the US dollar Japanese yen is probably going to make a new low, probably at least to the 155 range. And it could even drop even further than that as well. This right here is another example of the correlation as well. So we can see the US dollar Japanese yen and S&P 500 are very close. The US dollar Japanese yen is up 0.08%, whereas the S&P 500 is up 0.11% as well. Another thing that you want to consider when you're trading the S&P 500 is the overall strength of the US economy. So last week, if you tuned in to the testimony from Fed Chairman Powell, you will notice that he is very concerned with the labor market as he makes his decision to cut rates in September. All right. And he's very right to be concerned with the labor market. And here's why. You can see here that the unemployment rate in the US is on a steady uptrend. And we don't know how far up this trend is going to go. So every Thursday, when the unemployment rate report comes out, I'm pretty sure Chairman Powell is looking at this to get clues on when he should start lowering rates, if he should at all. Um, the consumer debt in the US is skyrocketing. You can see the non-housing debt and the housing debt is at record highs. So these are very concerning things in regards to the US economy, and also delinquency rates are rising again as well. So this is painting a perfect scenario where the S&P 500, which has been making record gains lately, is on the verge of a massive correction. And when that happens, that means the US dollar Japanese yen is also going to make a record correction. For the US dollar Japanese yen to be even above 150 is extremely high. We should see the US dollar Japanese yen technically around 140, if we're being honest with ourselves. So if we see a steady downtrend on the S&P 500 and it becomes a long-term trend, we're going to see some historic drops on the US dollar Japanese yen. That's going to be a massive opportunity for all of us. Okay. One other thing I wanted to talk about today was trading plans. I don't really talk too much about trading plans on my YouTube channel, but this is definitely something that I talk about a lot in my private group. Um, when it comes to targets, uh, I typically like to look for 1 to 5% daily returns. But in times where I'm being very cautious with the market, then I look for pips. So here's a chart where just making 30 pips a day, starting with a $500 account, can turn into $142,000 by the end of the year. So you kind of have to make your adjustments to what the market is doing. So if the market is very sketchy and you're not really too sure if you can hit that 1% or 5% daily target, then shoot for at least 30 pips per day. As long as you can make 30 pips per day, you can make a living trading Forex. And for those of you who are following my public account for Galileo, okay, so here's an example of what I was just talking about in regards to making 30 pips per day. So on my Galileo account right here, I decided to cut the day short, and I only made 47 pips for today on my Galileo only trades public account. Normally I like to have a 1 to 5% daily return, but because of all the volatility and I just don't want to be staring at the charts all day, I decided to just go ahead and make 47 pips and call it a day. So just keep those things in mind. If the daily return is too much of a stretch, at least try and make 30 pips per day. Let's just take one look again at the charts. So we have a beautiful setup on the US dollar Japanese yen. The price is at resistance and stochastic is going down, which is beautiful. Let's look at this on the 1 hour time frame, just so we can see a little bit more clear. This is very good, strong resistance. There is some strong support, and this is why it's so important for us to follow the S&P 500, because if we follow the S&P 500, we're going to get clues as to what the US dollar Japanese yen should be doing. So the US dollar Japanese yen follows the S&P 500. Okay, so we care more about what's happening with the S&P 500 than we do the US dollar Japanese yen. And we can see here on the S&P 500, it's on a steady downtrend. It made a small pullback, which is also why we saw that pullback on the US dollar Japanese yen, but it's going to correct itself. So if you're looking for an entry and you're going to be up when the US session opens, what you're looking for is if you're using the Bollinger Bands or whatever indicators you use for your price action, or if you're just trading off the candles, look for those overbought confirmations. Look for the momentum to show signs that the price has been overbought, and then go ahead and place your shorts. You can technically place a short now on the US dollar Japanese yen. Um, I would say anywhere above 156.500 would be a pretty good entry, if you can get it. So depending on when you see this video and what the price is going to be, um, if you place it closer to 156, probably use a smaller lot size and increase your stop loss a little bit, just so you can cover any volatility. But we're looking at a very nice short on the US dollar Japanese yen. Okay, and let's see here. I think that's pretty much it. All right, so thank you for checking out this video. Please like and subscribe if you like the video, and reach out to me if you have any questions. All right, thank you and have a great day.